Welcome back to America's Commercial Real Estate Show. I'm Michael Bull, like a deer caught in the headlights is what I was a minute ago when I was looking at the monitor. But this segment is brought to you by buildout.com. If you're a commercial real estate broker, definitely check out buildout.com. Today we're talking about single tenant net lease investment properties. I have Fred Weir with me and I have Nancy Miller with me. And one of the things that every investor has to deal with and an operator is financing. And I think in the single tenant net lease world, you can still get positive leverage, right? You still get in most cases, get a higher cap rate than the interest rate. Mm-hmm. Well, let's talk briefly about down payments and loan to value ratios. So if I'm buying a corporate store or if I'm buying a franchisee store, what's the difference in the lending that I should know about when I get started?
You're going to see generally across the board about a 65% loan to value to a 60 or 65%. So you have to be prepared to put 35 or 40% down on both. Okay. Interest rates may be a slightly bit higher for a franchisee, maybe 10 to 20 basis points or not. And it's ultimately then going to be a factor of how strong the financials are of the investor, also the financials and the experience of the franchise that they're buying that location. Does that franchisee have one other location or do they have 20 other locations? And you have to get the lender comfortable to make sure that they will go forward with it. And those two factors or three factors are the key pieces.
Yeah, something to be aware of. And one of the things that we run into as brokers is that one lender talks to a buyer and tells them something that, hey, that's not a good deal, or that no one's doing loans on those. Mm-hmm. But sometimes that's that one lender, right? What's your experience there, Fred?
It definitely is, and when we usually hear something to that where we see value and everyone else sees value, but the bank comes back and says, well, we really don't see value. Kind of what we're really hearing is that bank just doesn't have an appetite either for restaurants or retail at that time, and it really requires us to be proactive. And we've learned over time that when a deal comes up, it's not like when you're in school and the professor assigns the term paper, then you start on all the work. It's like we almost have to keep a little bit of work ahead of time and anticipate things. And we're constantly meeting with banks, and even some of the banks that we have relationships with, their appetite changes. Yeah. And so it's constantly maintaining relationships and having understandings of what we need and what they're willing to do, and then when opportunities present itself, kind of fitting the right puzzle piece in and saying, okay, well this is the right bank for that because
at the right time.
The right time, because they can go out of state, and they don't have any restrictions against that. The rates and the terms are what we are, and they're already familiar with our financial history and things like that. So when we're kind of going to bat, especially under a time crunch, what we're doing is really negotiating just on a few finite details, and there's already a mutual understanding of where we need to go and what they're willing to do.
That's great. So have multiple options if you're a 1031 buyer or buying any type of commercial real estate, single tenant net lease. And I mentioned 1031. That was saved by the Tax Act. That didn't go away. 1031s are huge in the single tenant net lease investment world. So Nancy, it seems like a lot of investors, when they get into that situation where their property they're selling is under contract, and sometimes they wait till it closes to start looking. What are some tips for 1031 investors?
Well, following up on what Fred just said a moment ago, prepare, number one, to have your financial paperwork together. Prepare so that you've identified potential lenders, because you think one may be the one and it winds up that they don't like that property type or they don't like this or that. That's one thing to do. The other thing to do is to start looking early on and not being afraid of making offers. I'm working with a 1031 buyer right now who closed a week ago or 2 weeks ago on their large transaction, and we've been looking for them for about 2 months.
Okay, so don't wait until your relinquished property is under contract.
No.
Maybe start when you put the relinquished property on the market. That'd be
Well,
probably a good
That's,
timetable.
no.
No, that's
no,
too late?
No. If I understand you correctly, well, I'll say it in a different way. If I'm making an offer for your property, you're going to say to me, has your 1031 buyer sold his other property?
Yeah, I ask you every time.
And you ask it every time. And if I say, no, he's just put it on the market, they say, see ya. But if I say he has not sold it yet, but the earnest money is non-refundable, and he closes in 2 weeks, now my credibility
Right.
is higher.
But I guess you could start understanding the market, get a relationship with a broker, start understanding
Absolutely.
the market when you put your relinquished property you're selling on the market. So start early. Also, you want to have proof of ability to close ready to go.
Absolutely.
How important is that when you're getting multiple offers on a lot of these properties, aren't you?
Absolutely, and we have a whole checklist of questions that we ask about the experience of the buyer. Where is the cash down payment coming from if they're financing and so forth, and do they have a lender lined up? What's the experience? Sometimes some of these investors who have a lot of property, they haven't bought in years, so many of the things that we tell them, and on the reverse side, we say, if you are buying, make offers early, because the demand for your property, don't be afraid on the reverse side to get an LOI in and get control of the property. So both sides, it's the brokers today are very aggressive at making sure someone, what we say, can go cross the finish line.
Yeah, well, it makes sense, and you want to be ready. Another way to be ready, so especially if you're doing a 1031 exchange, is also have your offer format ready to go, right? Instead of coming, hey, you find the right property, and then you're talking to your broker, well, who's writing, are we doing an LOI, are we doing a purchase and sale agreement, hey, who's doing it, right? You want to have that agreed to up front, right? So you
Absolutely.
can move on these things.
Absolutely.
Because some of these things just move rapidly. don't
Yes, yeah, it's here today, gone tomorrow. I had a situation over the weekend. We lost something by. We made an offer at 7.1% cap rate, and they took it as 7.15% cap rate, and buyers were all equal. And the difference is that other buyer, they had done a deal with them recently, so they knew the buyer could go to the finish line.
Yeah.
So.
Yeah.
You know.
Well, I'll give you one other tip that I found that can interestingly be helpful, and that is a large earnest money check. I've really seen sellers that, they're putting down $1 million earnest money, and everybody else is putting down, $25,000, and the big earnest money check could come from the buyer who's not made the highest offer sometimes. It's pretty amazing. So if you have a safe contract, you have a safe escrow, that's another way to do it. Well, what would you leave our audience as a closing thought, Fred, about the single tenant net lease world, or as an operator or investor or developer?
I think the market is changing for operators. Certainly there's more competition. I think how we reach our guests is changing. I know for us and a lot of other brands, the needs for property has actually shrunk a little bit because we're making smaller buildings that have more access to drive-through, or things like online delivery, or things like Uber Eats. And so I think long-term for us,
maybe a smaller square footage building.
Smaller square footage
site.
building, less property, just to kind of get our costs and keep our margins in line, as well as just I think the need for operators to really focus on maintaining relationships with guests and focusing on making sure that they're only as good as the last meal served. Regardless of how great your product tastes or whatever, you're really only as good as that last meal served, and that's it's huge for long-term success. Because from an investor standpoint of what we're doing, you're not in it for a year. You're in it for oftentimes 20 years, sometimes longer, and you have to take that longer-term picture in an area where the shifting sands are great.
Yeah, there's an area that I went to recently where there's a bunch of restaurants in development that opened up, and I was asking a local there about all these restaurants and how they're going to make it, how they're doing. And when I asked him about a couple of them, he said when he started talking about his experience, it was really the service. It was do people care about what they're serving you and how they're serving you, and he decide which ones he's trying out and which ones he'll go to again. So that's a great tip. Nancy, what about the investors, the owners of the properties or investors?
I have one that it's a little bit of a niche, but it's a killer. There's a right of first refusal in a lot of the contracts for the tenant if they are a franchisee to buy the property. I have had 2 in the last week and a half that has exercised the first right of refusal.
Interesting.
This is the first time it's ever happened, and we were totally shocked by it, as was the seller. And so I think the sellers have to do a better job of vetting earlier on, and I think that I have to do a really good job of vetting it with the broker if it's not my listing.
Yeah.
Because we just lost several $1 million of real estate. We have to go find those. It's a good problem, but nonetheless it's a hard problem. So they're starting to buy their own properties.
Yeah, well, that's a good tip. Some of these tenants do have first rights of refusal to buy the properties, and the contracts and offers should cover that and have a contingency for it so everyone's aware of it and what happens if they do. Well, great information, Fred. Nancy, thanks for joining us.
Thank you, Michael.
And thank you for joining us out there on radio stations, iTunes, YouTube, the show website. We appreciate your comments and your shares. Thank you for being with us. Until next week, be sure that you always lead, learn, and laugh, and join us for America's Commercial Real Estate Show.